Inflation is a crucial economic indicator that affects everyone, from individuals to businesses and governments. The United Kingdom has recently experienced a significant increase in inflation, with the inflation rate rising to 10.4%. This jump has raised concerns about the state of the UK economy and what it could mean for the future. In this video, we will explore what inflation is, the factors that have contributed to the recent rise, and the potential impact on the UK economy. What is inflation? Inflation is the rate at which the general level of prices for goods and services is rising, resulting in a decrease in the purchasing power of a currency. It is measured by the Consumer Price Index, CPI, which tracks the prices of a basket of goods and services. The CPI is used to calculate the inflation rate, which is expressed as a percentage. What has caused the recent rise in inflation? There are several factors that have contributed to the recent rise in UK inflation. Firstly, the COVID-19 pandemic has disrupted global supply chains, resulting in shortages of goods and services. This has led to increased demand for some items, which in turn has pushed up prices. Secondly, there has been an increase in commodity prices, particularly for energy and food, which has further contributed to the rise in inflation. Finally, there has been an increase in wages, which has pushed up the cost of labor and, in turn, the prices of goods and services. What could be the potential impact on the UK economy? The rise in inflation could have several implications for the UK economy. Firstly, it could result in a decrease in consumer spending, as people may be less likely to buy goods and services due to their increased cost. This, in turn, could lead to a decrease in business revenue and profits, potentially resulting in job losses. Secondly, it could lead to a decrease in the value of the pound, as investors may be less likely to invest in the UK due to the higher inflation rate. Finally, it could lead to an increase in interest rates, as the Bank of England may try to control inflation by reducing the money supply. Inflation can have both short-term and long-term effects on the economy. In the short term, inflation can result in higher prices for goods and services, leading to a decrease in consumer spending and potential job losses. It can also lead to higher interest rates, making it more expensive for businesses to borrow money and potentially slowing economic growth. In the long term, high inflation can erode the value of savings and investments, making it more difficult for individuals to plan for retirement or for businesses to plan for future growth. It can also lead to a decrease in international competitiveness, as higher inflation can lead to a weaker currency, making exports more expensive and imports cheaper. To address the issue of inflation, the Bank of England may take several measures. One approach is to raise interest rates, making borrowing more expensive and reducing the money supply in circulation. This can help to curb inflation but can also slow down economic growth. Another approach is to use monetary policy tools such as quantitative easing, which involves injecting money into the economy to boost economic activity. However, this can also lead to higher inflation if not managed carefully. In addition to these measures, the government may also take action to address inflation. For example, it may implement fiscal policies such as raising taxes or reducing government spending, which can help to reduce the money supply in circulation and curb inflation. However, these measures can also have a negative impact on economic growth. The recent rise in UK inflation is a cause for concern, as it could have significant implications for the UK economy. While there are several factors that have contributed to the rise, the long-term impact remains to be seen. It is important for individuals, businesses, and governments to monitor the situation closely and take appropriate action to mitigate the potential consequences. The recent rise in UK inflation is a cause for concern, as it could have significant implications for the UK economy. While there are several factors that have contributed to the rise, the long-term impact remains to be seen. It is important for individuals, businesses, and governments to monitor the situation closely and take appropriate action to mitigate the potential consequences.